This shift in the JGBs this morning, we've practically doubled our yield in 10 days. How significant is it, and why should I be concerned?
Well, I mean, I think it's a significant move. I mean, you get the microscope out to look at this one, but the reality is that the Bank of Japan has a yield control in place, right? And they target the JGB yield, and the upper end of that band is 10 basis points. And as noted just 5 minutes ago, we touched the upper end of that band. So the market has to be anticipating a change from the Bank of Japan at the end of the month-end meeting, whether the yield curve control widens out, so plus or minus 20 basis points, whether they buy less securities, they buy a whole basket of different types of securities. It's not about inflation or growth being stronger in Japan. I think it's about tweaking the program so that the banking sector can be somewhat more profitable. I
presume that if the band was widened, that would be more of a cluster for you than the equity side of the equation. Is that a correct assumption?
Yeah, I think that's right. I mean, in our view, this is not necessarily about reacting to stronger economic growth or higher inflation. This is about tweaking the program, but it can have significant impact on the yen. We like the yen because of the risk-off characteristics that it has. In other words, when markets get more volatile, repatriation of money into Japan drives the yen stronger. But now we have this additional kind of kicker, if you will, by this view around change in policy. Now, it's moved quite a bit in the last few days, and the JGB yields, particularly in the long end, have moved quite a bit. And so we have to assess whether now the market's priced in for this kind of yield curve control. But again, when we look at the global central bank community, right, it's important which direction they're all moving. So the Fed is obviously hiking. The ECB is going to begin its hiking and its QE program. The People's Bank of China is still easing, it looks like. But if the Bank of Japan then moves to slightly more relaxed about the degree of accommodation, then you have now really three big central banks kind of going in the same way. So I think the market is very focused on it, although the move is absolutely microscopic in the big picture. What it implies could be significant.
I know, and I suppose, we get excited. We put a red headline out. You're right, it is microscopic, but it's the messaging that goes with that. You mentioned dollar yen.
Yeah.
I got excited. I looked back in time. I know it doesn't take much. 1980s. I was thinking about Kachagugu.
Yeah.
But let's talk about dollar yen.
Yeah.
Of course, this takes you back to the Reagan era of tariffs. So that was the predication of looking at this. Dollar yen this morning is 110.75. Let's extrapolate. Let's say they move the bandwidth next week. They tweak the bandwidth.
Yeah.
What does that do to yen in the backdrop of tariffs, potential tariffs?
Right. I mean, I think for the whole market in general and basically for the direction of the dollar, the tariff situation has been positive for the dollar, right? And so concerns about the potential impact on economic growth globally outside of the U.S. and in the U.S. If the tariff issue is lifted, and we talked about this, and we go back to economic fundamentals, right? One could suggest that the dollar's appreciation could reverse marginally, over the next several quarters. I think that's right. We look at things like emerging markets, which have really suffered because of the tariff issue.
Yes.
Right? To me, there's an attractive asset class. If the dollar, it just stabilizes because concern about the tariffs moves to the side. We go back to economic growth, strong U.S. economic growth, as you mentioned, strong oil prices. Right, this is a very good environment for non-dollar assets.